today we want to discuss what can we do to make a shift, because nothing's going to change unless we start to understand the power of data. Everybody here, I would venture to say, would go into the internet if they're buying a car, and they're going to find out everything about that car, how much it costs, where they're going to get the best deal, where they're going to be able to close that deal. The automotive dealerships understand that, and they have now become advocates of online shopping for a car. Why do we not do that in healthcare? Why is it in healthcare we have no idea, none, how much something costs? When you call a hospital and you ask, what is the cost of this procedure? They're going to tell you your deductible is X, your coinsurance is X, your copayment is X. That is not the cost. We don't understand the cost until the renewal. And all of a sudden, brokers like myself, like my agents, the other brokers in the world, insurance company, come and sit down with you and say, look, we have to give you a 20% rate increase. We have to give you a 10% rate increase because your claims are running at 90%, 100%. What is wrong with this picture? What is wrong with the picture is there has never been transparency. So we had no idea how much things cost. We only knew what we were covered for, and we only knew what our deductible was and our copayment. Well, part of healthcare reform did enact something that has helped us and has brought us here to transparency. And that is something called electronic medical records. The electronic medical records opened up a world to us that we never had before. We really didn't understand it. I'm in the business over 30 years. I didn't understand the dynamics of what that would mean once everything became electronic. So when all of that information started to go into the cloud, you had all this information in the cloud, how do we aggregate this? How do we use it for our purpose? And that is what we're here to talk about today. We are here to talk about the information, the power of the information, and how it's going to help us reduce healthcare costs. Because the knowledge and the data is power. So I want to start off my first question with John. But before I do that, I'm going to have each person introduce themselves and talk about a little bit about what they do. So Patrick, you're on.
Sure, good morning. My name is Patrick McNealy. I'm the regional business development manager for the Southeast for a company called ClaimDoc. We essentially help employers regain control of their healthcare expense through a comprehensive auditing and repricing program for claims. And we will certainly get a little more into that to help decode what that means, I think, as we move through the panel.
Cody?
Good morning. My name's Cody Fair. I'm our Senior Director of Sales at a company called Springbuck. And what we do is healthcare analytics. So on a basic level, we bring in all your claims data, your medical, RX, dental, vision, work comp, whatever data we can bring into our system. And then we use advanced machine learning techniques to essentially mine through that data and tell you where the opportunity is within your specific population.
Hi, my name's John Augustine from WelliNet Healthcare. We're a family business based out of the Philadelphia area. We build health plans that compete with the national carriers, and our focus is on helping members and their families find the very best providers at the exact time that they need it, and incorporating many benefits, including a lot of the complex, expensive benefits and prescription drugs free of charge to members when they make wise decisions, which gets our families better outcomes at lower price points.
Hi, I'm Adam Friedman. I'm the CFO of a company called Arnet Pharmaceutical Corp here in South Florida. I'm here because I'm Saposnik's favorite client, and they wanted some perspective on how some of the companies run with some of these issues that we're talking about today.
Thank you. Okay. First question goes to John. I think it's important to start by asking, what does healthcare transparency really mean to everybody here? And John, how WelliNet and what you see?
Sure. So it's important to remember that premium costs are driven by claim costs. That's just such an important fact. We have to always remember that. And the other really important fact is that in a PPO network, like you're all using today, every PPO provider gets paid something different for the same service. So if claims are driving your premium and every PPO provider gets paid something different for the same service, we should be incentivizing employees to use less expensive PPO providers. At the same time, we need to remember that medicine is a practice. Doctors practice medicine. So we should be incentivizing employees to find and use providers that have more practice. Better practice, lower costs. That's healthcare transparency to me. As a family that's trying to access healthcare, the people you're trying to attract and retain, that's what they want. Better doctors, lower out-of-pocket costs. That's what healthcare transparency means to us.
Patrick?
Sure. Currently the way health insurance works, the claims are paid almost like a black box. We don't really know what we're paying for. We don't know how much it's going to be up front. We don't have a way to manage it. So from an employer perspective, there's not much you can do to manage your healthcare costs, your claims in particular, in this case, unless you have visibility. Visibility and transparency to me really comes down to not only being able to see the cost associated with each claim, transaction, incident, however you want to call it, but also what I call care metrics. Just because you're paying a higher price for something doesn't necessarily mean you get better care. So when it comes down to transparency, I'm really, and I'm sure we all are, thinking of how we can use that information to have better outcomes for your employees at a lower cost than what you're paying now.
Cody, now that we have a clearer picture of healthcare transparency, what's the impact of data?
So what is the impact of data on healthcare transparency? To start, I would say that data is affecting our lives in every aspect of it right now, whether we realize it or not. So when you were on the way here and you put the hotel in Google or Waze or whatever it might have been, that was big data that got you here and told you how long it was going to take. When you got close and decided you needed Starbucks or coffee and you put it in and it told you it was 0.2 miles away, again, that's big data. It is affecting every part of our life, and healthcare is no different. At the end of the day, for us to be transparent with healthcare, we have to know the data and everything that is behind it. We have to understand the cost. We have to understand the drivers and where it's all coming from. Where it stands right now, to some degree, that's very siloed. There's gigabytes of data that are in these different silos, whether that's the hospital, the primary care physician, wherever it might be. There's a lot of silos, and we've got to start bringing that data together. Probably the best example of that everybody would know and recognize is IBM Watson. We all see the commercials all over TV. That's essentially what they're doing, is bringing that data together, which is going to help us from a healthcare perspective in a number of different ways, which we'll talk about a little later. But it affects everything that we're doing, and healthcare is no different. And for us to truly be transparent, we have to get our hands on that data to really understand the drivers.
So when I hear the term machine learning, what does that mean in the healthcare world? What does machine learning mean?
So what does machine learning mean? A very complicated concept at times,
easy,
right? And that's good.
I'm only a broker, so make it
they
easy.
brought it down for me, which is good. So machine learning is essentially a subset of artificial intelligence, which I imagine you hear that as well. What it means is machines now have the ability to do what we do as humans and learn from experience. And that's what machine learning is that it is learning from experience. So there's the logarithms that go through, And the more data you bring in, the smarter that machine is because it's learning from those experiences. So there are instances now that we can predict who diabetics are going to be within your population. We can predict different diseases. The way it affects healthcare is going to be all over the board. It can make hospitals more efficient. It can make sure there's no human error when it comes to pharmacy and medical and some of those things. It's going to touch every single piece of healthcare. As I mentioned earlier, it's touching all of our lives now. We just don't realize it. But essentially, the more data we can get into these machines, the more they can learn because they learn from the experience, the better outcomes we're going to receive across healthcare.
Adam, you took the leap of faith and you decided, I want to control my destiny. And several years ago, you decided with Sandra that it was time to consider and really look at alternative funding, self-funding, and really start to understand the data. Let's discuss a little bit how that's impacted Arnet and what you see now that you understand more the data.
Okay, absolutely. So as she mentioned, quite a few years ago, we were proposed with an option of either staying fully funded or going self-insured. Our company takes pride in making sure that all of our employees, it's a family-owned business, all of our employees have health insurance paid for by the company. So obviously our costs are very high. So we were managing the costs and comparing them to what it would be potentially under self-funding. So we took the leap based on an idea that we were going to save money because our experience was very good. We had a pretty healthy workforce, and so we took a shot. And then we took a shot again the next year, and then the next year. And every year that we've had it, we've always had savings over what would have happened had we been fully insured. And the way we manage that is we just look at it on me monthly, but the company looks at it at least twice a year to make sure that we're going on the right trend and making sure that the company is not getting back to the point where we would need to be fully insured. So that's pretty much how we manage the risk. And, as I said, some of the savings that we have had have ranged anywhere from, I would say, 5 to 10% per year based on managing this. And we look at it, obviously, each year when we come around to renewal, make sure that the experience has been correct, and then we go forward and we continue on with it.
And the delta is really what's significant because when you're looking, and Adam, how many employees are you insuring?
We have 300 employees that are insured.
So when you're looking at 300 employees, which is really many of you are in that range, and you think about a savings of 10% as opposed to an increase of 5 to 10%, that delta is astronomical because the chain reaction of the increase then starts to impact the employees. Deductibles, co-payments, all of that increases. So, John, the whole idea in a big area that as an agent and as a broker that we struggle with is that many clients believe that self-insured means they're at risk. Let's talk about really what it means to take a look at self-insured, how a client protects themselves, and alternative funding.
Sure. So I think one of the reasons you're all here today is because the fully insured market's risky. You're getting increases that average 8 to 12% every single year, which, to Rachel's point, compounds over time, and it creates all kinds of problems. You're doubling your costs every 7 to 10 years. There's one great benefit of fully insured plans, though, and that's they're pooled. The premiums that you pay are based on the collective claims experience of all of the employers in that pool. And that can be good or bad. You as an individual employer might consume far less health care than what you pay in premium. But the counter could also be true. Maybe you pay $500,000 in premium, but your people use $1 million in health care. So if you're the company that uses far more health care than what you pay in premium, the fully insured market is a great place for you because it's subsidizing your costs. But if you're an employer that consumes far less health care than what you pay in premium, you ought to seriously consider alternate funding or self-funding. Here's the basic difference. So in a fully insured environment, there's 3 cost components. You don't see these necessarily, you just pay a premium each month, but the 3 cost components are claims, reinsurance, which is your insurance company buying an insurance policy in case someone has $1 million claims, and the cost of administration. Claims, reinsurance, administration. An alternate funded approach has the same exact 3 cost components, but we call them slightly different things. So in an alternate funded or self-funded arrangement, about 70% of all your costs will be claims, about 20% will be what's called stop-loss insurance, and about 10% will be administrative fees. This stop-loss insurance is really important. This stops your losses as an employer. And there are 2 types. I won't get too granular here, but there's one policy that insures specific member risk. If one employee has catastrophically high claims, you have a stop-loss policy to stop that. And you have another policy called an aggregate stop-loss policy that limits the claims for the entire company. So let's talk about that policy for just a moment. If we take the aggregate stop-loss, which limits your claims for the entire company, you know exactly what your claims risk is. Going into this environment, you know exactly worst case scenario what you can spend in claims. So if you take your worst case scenario for claims and then you add to it the cost of the stop-loss insurance and the cost of the administration, you have what I refer to as your drop-dead worst case scenario in an alternate funded or self-funded environment. And you're going to compare that to your fully insured costs. Here's the opportunity. A fully insured plan goes up every year. And even in your best years, you might get a flat renewal or a slight reduction, but you and I know that's very rare. So it goes up every year, and you're in a pool with all those other employers. When you're alternate funded or self-funded, you only pay for the health care that your people consume. And therein lies the opportunity. If our costs are $1 million here and $1 million here on paper, but my people only use $400,000 of health care because we help them find better doctors and less expensive doctors, and we steered them to centers of excellence, etc. You get to keep all that money. That's where his savings is coming from. And the more strategic you get with the consumption, the more you support employees, the more you hedge your bet.
So there's terminology, because we're entering a new world, that is starting to pop up. And one of the terms is called reference-based pricing. So, Patrick, let's explain exactly what reference-based pricing is and how that impacts, once again, the cost and transparency.
Sure. I'll actually start with a story of how I got here, and I think that really illustrates the issue and how reference-based pricing can address it. I was a human resources director having the same problem. Many of you probably are. You lose 6 weeks every year trying to figure out, what are we going to do with insurance, sending your plan out to market, renegotiating. It's a bit of a pain. So I went ahead and I sought out alternate, and I was trying to find a different way of doing it so I don't have to do that every year. And I happened to find this organization and I sat down with this woman named MJ. She ran the claims department for ClaimDoc, the organization I work for now. And she was telling me about this one line on a claim she got in, and it was a nasal sanitation device, and it was for $800. Didn't really mean much to me at the time. Nasal sanitation device, don't really know what it is. And she went on to tell me, well, I didn't know what it is either, and I have a PhD in nursing. She went ahead and called the provider and asked what it was. Any guesses?
Tissue.
There's a box of Kleenex. All right, so.
Wait, it was $800.
$800 for a box of Kleenex. But now when you look at how providers are paid on PPOs, they're paid a percentage of their billed charges. So if a good PPO contract might give you a 70% discount. Well, what's 70% of 800? We got 560. So that means that provider wanted to get $240 for a box of tissues. That's what's happening every day in your fully insured plans, and why you continue to get seemingly arbitrary increases. So take that out to scale on a big plan, right? You have 300, 1,000 employees, whatever you have. Imagine the cost savings there. So to dive in a little more as to reference-based pricing and what it is, we're using Medicare. So if a bill comes in for, I don't know, a knee replacement surgery, right? That would really be a bundle, but it might come in or it would be a $25,000 bill. That's probably what you should pay. We've gotten bills in for that same procedure at $100,000. Well, they're going to send up the $100,000 claim, bundled claim, so they can get their discount. So all these claims they're submitting are being inflated. It's almost like, you ever hear the retailers, well, everything's 50% off, but they marked it up 200%? That's what's happening. So what reference-based pricing plans, and I don't think anybody's using anything but Medicare, right? I haven't seen anything. So we use a percentage of Medicare. Medicare, facilities send Medicare the cost for each of their services every year. Medicare knows how much all of these services cost. We, in the reference-based pricing space, say, no problem, we know your costs, we want to make sure you are adequately compensated for your services. However, we're not going to pay blue sky pricing of $240 for a box of Kleenex. When we get bills in, we're using a reference point, a metric, something that we can see and understand. I don't know, you all are in different businesses here. You might sell a product. Do you just make the price up and say, well, all right, the cost to produce and market this was 20 bucks, I'm going to sell it for 5,000? That's not realistic. You're going to say, okay, well, it cost me $20 to produce and market. Maybe 100% markup. I don't know, right? So you're going to sell it for 40. You have some foundation of where you're starting to get your pricing from, and that's what we do. Reference-based pricing pays according to that foundation.
Adam, now that you've been self-insured for several years, when we talk about managing risk, what are some of the strategies you've used to manage your risk for Arnet?
Well, as John mentioned, we have all the stop losses, which prevent us from worrying about a significant health issue for an individual or for the overall company. We also, look at all the claims and make sure that, we're managing them and making sure that they're not charging us the improper amounts. And one of the things that we're experiencing, that I'm sure everybody's experiencing, is the prescription drug costs for companies are going out, through the roof. And so one of the things that we've already implemented, and we may need to continue to implement even further, is a step drug program where people have to, make sure that they're taking the non-generic for a specific reason at the doctor's request. And so, we're trying to make sure that we're, limiting the amount of exposure as these claims do come in, and, they can get out of control. So, we've got that process in place for managing the expenses as best as possible.
Cody, data's power. So what are the trends that you're seeing now that you're warehousing all this data? And how can that data really start to be used for predictive modeling?
So what trends are we seeing from a data perspective? To start with, I think it probably helps to give a little history of that specific industry. So typically, years ago, it started out as data warehouses, and this was typically reserved for jumbo-sized companies, tens of thousands of employees, and what these data warehouses did is brought in this claims data. So it could have been your medical and RX is typically where they started. They might bring in some of that other data, and all it did was store it in a data warehouse. And that was typically why it's reserved for these jumbo companies, because they had analysts on staff, 10, 12 analysts that would mine through that data and take hours and hours and hours to try to find opportunity within the data. And opportunity, it could range a number of different ways. It could be costs on the medical plan. It could be all over the board. But you had to have expertise on staff at the employer to really do anything with that data. Years later, they brought in healthcare analytics. It still was typically reserved for these jumbo-sized companies, and all really analytics did was put a pretty chart or graph on top of the data. So it made it a little easier to understand the data. So the trends that we're seeing right now is taking what affects our lives as a consumer, the machine learning, the artificial intelligence, and we're applying it to these data warehouses. And that's what my company Springbuck is doing, is we're going through there, and we essentially, the machines are mining through all of that data for you to tell you where the opportunity is within your population. So it's not something that's just reserved for your jumbo companies anymore. It's something that a company with 200, 300 employees can still achieve the same results. They can still achieve the same metrics and everything because the machine learning is effectively doing that work for you. So in general, we're seeing a lot of companies that probably at one point thought they were too small to go self-funded or level-funded, whatever it might be. We're seeing more and more people moving to self-funded because they want to understand their data, they want to understand their costs, they want to understand their drivers, and then they can now use the data that was typically reserved for much, much larger companies because of the advances in machine learning and some of that it's going to give them the results, and they don't have to go hire very high dollar analysts on staff to handle it for them.
And we all know that from a claims perspective, when you look at your claims run, and everyone that sits down and looks at that, you know that 20% of your population is driving 80% of your claims. So imagine being able to impact that 20% or that 80% and be in front of a claim that may occur, such as diabetes. Diabetes, if we get in front of it, is something that we can really make a difference in someone's life, but it makes a major difference when someone goes from borderline diabetic to then becoming a diabetic, which could have probably been prevented through diet, through nutrition, through exercise, through awareness. Those claims dollars we will start to be able to control. So Patrick, when you are repricing, because that's where you really spend your time, claims are coming in, your company's auditing these claims, what percentage of the time are you seeing this makes no sense, we're pushing back, and what kind of savings have you been able to achieve for your clients?
That's probably a pretty big question.
Go big or go home.
ClaimDoc, we certainly do reference-based pricing. We also do claims auditing. The two don't necessarily go hand in hand. Well, they go hand in hand, but not all reference-based pricing organizations do auditing. We are probably close to 90% with some type of billing error, and is certainly repricing.
That 90%, is it ever in the client's favor? Like ever? Ever? Never.
No,
Okay.
no. I mean, it's really, it's egregious billing. They call them errors. I guess I'll say it publicly, probably call it more closely akin to fraud, but there's a lot of issues where they're double billing that you'll never see, especially in a PPO type of an environment. Claims, certain types of procedures like that knee replacement should all be bundled together, right? So it's kind of like a package deal. But the providers figured out that they can charge that bundle, but then they can also itemize everything underneath it and get paid twice. That is probably the most common error we see.
Error. So think about that when, again, you're looking at your claims run, you're not seeing all the data. Typically, what you're seeing is a monitoring report. It's showing you the premium you paid in and the claims that were paid out. There's incurred claims and there's paid claims. when you're looking at that monitoring report, it's typically incurred, which means that there is run out that they add into that number. So you don't really see a real number. You see what they want you to see. So, John, we know that insurance premiums have its components. And most of the component, the biggest part of that component is claims. The cost of the claims are the driver of really what we're paying. Administrative costs are administrative costs. It is what it is. They have to pay, someone's got to pay the lights, someone has to pay the employees. They've got their administrative costs. But the bulk of what's going on is on the claims costs. What are some of the simple turnkey strategies that an employer can use to implement some of these cost reducing ideas?
Sure, so what we've seen, the simplest strategies, and I touched on this earlier, is to educate the employee population, level with them, have a conversation. I mean, if you guys just think about your own healthcare, when you need something, you want the very best doctors. And it's a challenge to find good doctors. Who do you ask? It's hard to find. So the simplest strategy you can do is implement an advocacy service for members that guide them to doctors based on outcomes. It's very simple. It's hard to do in a fully insured environment. It's easier to do in a self-funded environment. We have a partner that looks at 36 different data points on providers and can guide you to any specialist or facility across the country based on exactly what you need. So that's the first step. And then the second step is to then incentivize people to use better providers and less expensive providers. If you just think about it, we use the knee replacement example. If you do everything randomly in life, in healthcare, if you go to a random knee surgeon, you'll get a random outcome. Because if you just think about your own business, or attorneys, or doctors, there was someone that was the best at it and someone that's the worst. And if we do everything randomly, you're not going to get the best and you won't get the worst. You'll have somewhere in between. So we should put some focus on getting people to the better providers. And then since they all get paid something different, we should be waiving all the cost sharing, remove the deductible when an employee chooses wisely, a better doctor and a less expensive doctor. If we're doing something complex like a knee replacement, you can make that outcome predictably better. If I send someone to the top fifth, to a surgeon in the top 5th percentile of knee replacements, I'm going to get a much more predictably good outcome than if I had sent it to the surgeon in the 95th percentile, which means less complications, less readmissions, which is lower claims, the member's back to work quicker, which means more productivity for your company. And oh, by the way, some of the best doctors are also the cheapest. I mean, think about it. If all we did was knee replacements, that's all the doctor did, that's all the nurse did, that's all the surgical team did, they're going to do it better, quicker, and more efficient, and cheaper than a doctor who does 10 or 15 a year. So being targeted as an employer, improving outcomes, waiving out-of-pocket costs for members are two of the simplest strategies that can be used.
Adam, what have you found as your employees' reaction has been in terms of your retention and recruiting, the fact that your healthcare costs have stayed stable or been reduced?
Well, I don't believe necessarily the employees are aware, other than they know that their health care is being paid for, and they appreciate that, and that does help with whenever we're going through the process of recruiting. We have a lot of workers that are in our manufacturing and packaging, so many of them are coming, some of them are just coming, this is their first job in the United States, some of them are just, getting started. So it's definitely a feature that makes our company more valuable than another company that's not paying that insurance. But as far as the information that's presented to the employees, we have consistent amounts of wellness programs and different testing of their health, even in our facility. We'll do biometric screenings and we'll do all sorts of angiograms, and they all appreciate those kind of additional things to make sure that they're healthy. And we, of course, know on the back end that's important for us to limit the amount of costs down the road if we find things that they need to do something on. So that's.
Everyone understands the language of free, okay? So But if you poll people, they don't understand what a copay is. They don't understand what a deductible is. I would wager if I asked some people in here to define it, you wouldn't quite define it properly. So to expect an employee that makes $20 an hour to understand it is asking too much. But they do understand free. So here's just an example of what we've been talking about. What if you said to your people, here's your plan designs that you've always had, here's what you pay for them. So here's your premium contribution, here's your deductibles and your copays. But if you happen to use this imaging center, it's free. If you happen to use this surgical center, it's free. If you happen to use these drugs, it's free. We're not talking about taking anything away. We're talking about empowering people, doing the legwork to build those what are called direct contracts at a surgical center. The surgical center wants people to get sent to his facility, and he'll agree to a lower payment if he's getting people sent to his facility. And we can do things like that. So we can look employees in the eye and say, look, we're all in this together. We're trying to control your premium, lower the utilization, but we have to do it as a team. It takes a village, not just one person. But when we all work together, when we're mindful of the outcomes in advance, when we're mindful of the cost in advance, the claims are not as great at the end of the year, which keeps the premium down.
John, Patrick, Cody, what can we do in the pharmaceutical world to really start to drive this message home? Patrick?
From a pharmacy perspective, there are a number of manufacturer rebate programs out there that you can enact as an employer. But at the end of the day, I think a lot of this comes down to education and aligning your business needs with that of the employee. So, using things like HRAs, health reimbursement accounts, that kind of stuff. But we need to really, just to reiterate again on that, is bring the employees in line with what the plan's needs are. And that's education, helping them understand how big of an impact the pharmacy cost has on the plan, and reminding them in a constructive manner that that directly affects how much they're going to pay next year. And that really goes across all lines. I mean, claims in general, not just the pharmacy spend.
So just on an aside, prior to advertising, pharmacy represented 3 cents of every dollar for your medical claims. Prior to advertising, 3 cents of every dollar. We are now hitting close to 27 cents. So 27% of your claims are coming from pharmacy. Think about taking control of that. Cody?
So from our perspective, it's about knowledge and education. So we can use data to call out these instances and understand where it's happening, where maybe we're using, we're not using a generic alternative, where we're using a more expensive drug. So the data will tell us that, and we can call that out and put that in front of you, which could, could lead to plan design change, to maybe start covering things that you didn't previously. It could lead to a number of things, but more than anything, it gives you the ability to educate. Part of, with Rachel's example, when the commercial got in front of the employees, right? And that's where it all kind of came from the same instance, you as the employer, if you have that data and you know where the issues or concerns are, then you can get in front of them. And that can be through emails and newsletters. There's hundreds of ways you can do it. But if you have the information, then you can educate. And you can be very direct with your education to where they see it and they understand, and you're reaching out to individuals that are most needed with that help.
What can we do from its plan design?
Sure. So first and foremost, I think one of the most important things we can all do is educate that employees, before they fill any medication, should check GoodRx. Because there are times where the GoodRx cash price will be less than what the copay is. So the first thing we should be telling people is, before you fill any drug, do not take your Blue Cross card out. Do not take your WellNet card out until you've checked GoodRx, because you might be able to get it cheaper. Now, every drug paid for cash never hits your health plan. So that's one quick way of getting claims off your health plan. Next thing is, we would encourage you to put in a pharmacy advocate, a live person that says, hey, how can I help you? You were just told you need Humira. Here's what you need to know, okay? And then from a plan design perspective, we can do a couple things. Domestic steerage, that can be GoodRx. So GoodRx is telling you which pharmacies to go to. So we could, in theory, offer incentives for members that use certain pharmacies that charge the health plan less. We can encourage employees to allow some of their drugs to be shipped in internationally. That's called international mail order. And in exchange for that, it's the same drug, same bubble wrap, same manufacturer. Manufacturers in the U.S. ship them abroad. We're shipping them back in at a fraction of the cost. And in exchange, members will get that drug for free. So the health plan pays less for the drug, the member gets the drug for free. Patrick mentioned manufacturer's assistance programs. Same thing. If you call your pharmacy advocate and you allow them to proactively enroll you in a manufacturer's assistance program, like a lot of these drugs have income limits for manufacturer's assistance. So if your family makes less than 80 grand a year, you can get the drug completely paid for by the drug manufacturer, which means it doesn't hit your health plan, which means the member gets the drug for free. So manufacturer's assistance is a great thing. And then building a formulary based on value. Humira is not a high-value drug. It's very low value because it costs a fortune and the efficiency is not very good. So you can create a formulary where the low-value drugs cost the members a lot because that costs you a lot, and you can offer many drugs at free or very little cost to members that have been around for a while, that are proven, that cost the health plan $100 instead of 60 grand a year. It's a huge difference. So there's a variety of things that can be done.
Adam, what advice can you give employers so that they can start to take control of their future?
Well, again, my main role here is to explain how self-funding has really given us the opportunity to manage our costs compared to a fully insured program. So we go through that process and we analyze it on a monthly as well as an annual basis to make sure that we're managing the costs. To go a little extent on what we were just talking about with prescriptions, I had a personal situation where my daughter was on a medicine. She's been on it for quite a few years. The doctor gave her this little card that said free if you use this particular medicine. The medicine turned out, we saw in the bill the next month, it was $1,200 instead of $45, the normal. And I said, what is she doing on this? And said, oh, well, you take these five pills once a day instead of 2.5 twice a day. I said, there's no other difference? No, it's the same. So I took her off of that, of course. And, so you got to manage. You got to look at all of the costs that are showing up on our bills, because we get the bills. The bills come in with, like John mentioned, the stop loss and the admin fee, and then the actual claims. I can see the actual claims, so we look at them and we analyze them to see, what's happening with our company, with particular people. We have to be obviously very careful and not tie it together with other people because of HIPAA violations. But we definitely can look at, what sort of trends are happening with healthcare costs. Obviously, the pharmacy is a big issue, so we're managing that. And with the way we manage that is, I mentioned it before, we do sort of a step program, try and prevent certain drugs from actually getting, approved by people without the actual doctor saying you must take this drug because it's the only one that'll do it. And, we have to manage that because there are these various cost drivers that could just go through the roof if we don't watch over it. So it's a balance, and we spend a lot of time just making sure that we're in compliance and keeping the cost down, because if we keep the cost down, obviously we can stay on self-insured. One thing I was supposed to mention, but we didn't, that part of self-insurance is you also have to have a termination fee, which means that if you go off self-insurance, when we're going through the enrollment and looking at the next year, you have to pay for a month and a half of claims, so we keep this reserve just in case we ever go off of it. But generally every year it's cheaper, so we stay on the self-insurance. And so, those are sort of the drivers of trying to manage our costs as best as we can within the rules that we are presented with.
Cody, as healthcare analytics becomes more and more developed, what's the future of the analytics, and how can employers use that analytics to really understand what's going on?
Yeah. So the future of healthcare analytics, an interesting question because I'm probably nowhere near smart enough to answer it. We don't know is part of that answer. Is that, what I would say, and it's kind of where I led with today, is that health analytics affects every aspect of our life, whether we know it or not. Healthcare is a little behind from that standpoint. Now, they are catching up. So when I was thinking about answering this, I kind of was just thinking through examples, right? So earlier today, I mentioned Starbucks, how easy it is for you to grab Starbucks and know exactly where it is at. Why would we live in a world where that's not the same to find the best provider for that knee replacement or whatever it might be? And some of these things do exist today, but consumer technology drives the commercial side. And it's going to continue to happen in that manner, and there are instances where some of this exists out there, but analytics will tell your employees exactly where they need to go for the, the best service with the least amount of cost. We live in a world right now where your smartwatch probably knows more about your health than your primary care physician, which is a weird place to be in, right? But analytics will start breaking down these silos and bringing all of that together to where your primary care physician knows exactly what happened in the hospital, knows about your biometric screening data, et cetera. So it's going to bring all of that together. So in general, it should make our life easier. It should make us easier to consume healthcare. It should make it cheaper for us in the long run. But it's going to affect every single aspect of healthcare, and in many instances probably is today where we're not aware of it, but it's going to continue to enhance. It's going to continue to get better, which is part of the exciting part of this answer, is that I truly don't know 5, 10 years. There's people far smarter than I that will decide that, but it will affect our lives, in my belief, in every aspect.
And John, what's the future look like to you?
To me, it's companies like the ones up here that are going to change things. The current model, like you might be wondering, why isn't it that Cigna or Florida Blue has come out with these analytics that show us who the best surgeons are and show us who the cheapest surgeons are? There's misaligned incentives. Your insurance carrier can't raise your premiums unless the claims go up. This is not rocket science here. They're in the business of making money. Their share price has quadrupled in the last 10 years, on average, if you look at all the big insurance companies. So it's sort of independent companies like Springbok, like ClaimDoc, like WelliNet that are saying, we got to stop the madness. Americans deserve to be able to type into their phone and figure out where they should go. Like as you gave that example, you typed in Starbucks on your way here. That seems so simple. Why doesn't healthcare work that way? It's misaligned incentives. Where this is going is away from fee-for-service. Right now, doctors get paid a fee whenever they do something. So they got to do stuff if they want to make money. It's very simple. What you heard me specifically talk about today was a concept called value-based insurance design. Build your health plan around value and reward your users for value consumption. You can still operate in a fee-for-service model if you want, using a PPO network, but reward your people for selecting on value. ClaimDoc has an environment where they don't use a fee-for-service model. They're saying, well, here's all the services you provided. I guess we'll pay you a fee, but we're not going to give you the fee that Blue Cross agreed to. We're going to give you a fee that's reasonable. Medicare pays you this much. Blue Cross is paying you this much. How about we pay you this much? So moving away from a traditional fee-for-service model, rewarding good behaviors, and trending towards value-based insurance design in a self-funded environment, because you have the control. You can, with the flip of a switch, save $12,000 a year, which he just did when he got his daughter off that medication. 12 grand in one night on one simple decision.
Patrick, I'm going to let you answer the last question, and then we're opening it up to questions for everybody.
Sure. As you mentioned, there are a lot of misalignments in the healthcare industry, well, the benefit space, health insurance, that don't really line up with your business needs, right? I can't speak for you, but in general, we want excellent benefits at a fair price. Fully insured companies, in most cases, aren't on that same program. They're driving revenue just like you are. Unfortunately, their revenue, when they drive revenue, it's taking it away from you as business people. So looking out into the future, I see a really bright future for reference-based pricing, of course, but what I'm more optimistic about is how business leaders are looking at there's still a slow burn, as you'll probably agree. They're starting to look at health insurance strategically. And piggybacking on everything you've already heard up here, we're strategically designing our health plan, the contributions, how we're using it. Business leaders are starting to treat it like it's a part of their business and manage it as a part of their P&L instead of this requirement that they just have to trudge through every year and just get passed. Because it can provide a real benefit, and you don't have, and you can pay less doing it. And so that's what the future looks like to me. I think it's really exciting. There's going to be a lot of change out there, and it's all going to be driven by people just like you. We want to take control of it. And just as a quick side note there, from an HR perspective, I don't know how many HR directors we have in here. A couple?
Couple.
Yeah. I can tell you that when I brought this plan to the table at my previous organization, you know, not only did I speak the language of strategy to my CEO, I showed him a 32% savings, which, you know, compounds to a significant amount more over time. But I got a seat at the table, at the big table in the organization. This type of stuff, strategy, you know, whether Springbuck, WelliNet, this can elevate your status in the organization because you're starting to think and act like the CFO and CEO if you're not there already.
Thank you so much. I really believe that this is the beginning of the changes that are needed in healthcare. So we really appreciate that you came, that you listened, and you absorbed some information that maybe you haven't heard before. You know, Sapposic Insurance wants to be at the forefront of what is going on in healthcare. Paradigm shift, and everybody knows my paradigm shift has started many, many years ago. I'm continuing with this with my team. We have a fantastic team that is in line, our philosophies, our progressive way of looking at things. This is what we're here to do. I actually have, in the South Florida Business Journal, there's going to be a series of articles, roundtable discussions, talking about this. I have invited the health insurance companies, have yet to get a yes. The hospitals have been much more open. So we are entering in conversations now that they're uncomfortable with because transparency is uncomfortable. But I would like you to pass that word around to your colleagues, to other professionals, and let them know that there is hope, that we are not just going to throw our arms up and saying, oh, well, that's just healthcare and we're just going to accept the increases. No, we can't afford it. The employees can't afford it, and it's up to us to really change this. And I'm very proud of my team to be at the forefront. I'm really proud of everybody here. You guys were fantastic. Patrick, Cody, John, Adam, thank you so much. This has been great. I want to thank also my Director of Marketing, Bibi. Thank you for putting this whole thing together. I want to thank Jacqueline for all the social media that we've been getting. A lot of people came in from social media, so it's powerful. And we have to look at this as a journey that we're all on, because every one of us, not one person here can say healthcare doesn't matter to me. Not one. And the more we get a hold and understand claims, the more that we are looking at this, the more we can fix it. Just remember, I want to leave you with this thought. Every one of your employees are crucial to your organization. None of us can function without employees. We've got 20%, if you look at your population, 20% of your employees are impacting 80% of claims. That means that your employees that are compliant, doing the right things, are getting the shaft. We need to change that. We need to reward those employees, that 80% that's doing the right thing, they need to be rewarded. And we need to shift. We need to start to think. And that's what we're here to do. So join us on this journey. Please start taking a look at the South Florida Business Journal. It's going to be starting very soon. And please, please, please fill out our survey. Let us know what you thought, because this journey and this train has left the station, and we're going to make a difference. Thank you very much.
Thank you.